Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points.
In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data. So essentially what hedge funds and the big players in the market are doing and how they're moving and shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts.
Now, starting here from the monthly time frame, what we can see is that we just saw the creation of a series of higher highs and at the same time now also higher lows. In fact, starting from here, we can see how the market has been every time essentially pushing to the upside with the last higher low created just here. At the same time, the market has also created some higher highs, and the next logical step, since we just got a higher low, would be for the market to go and create yet another higher high, because even though this is definitely not a strong uptrend and there is a lot of sideways movement, if we zoom out, as we have just seen, clearly the market is still creating higher highs and higher lows. So there is definitely the possibility still of seeing more bullish price action being created. Now, let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly standpoint, we can notice how the market has just broken above the previous high. In fact, the previous high was exactly this level here. This was the previous day weekly resistance from which all this move to the downside was created, which now that the market has broken into the upside is currently acting as support. So what we know in the market is that if there is a level which is previously acting as resistance, the market is respecting it as resistance, and then the market breaks above it. At that point, you would expect a retest of the level, the market to respect it as support, and then to see a potential rejection to the upside. So in a situation like this, there is a good probability of seeing a potential test and then rejection to the upside away from this zone. We can also notice, however, that we just got an impulse and now the start of a correction. So if we want to measure the correction after the impulse, we have to take our Fibonacci from the low to the high of the impulse leg. And this shows us how we have the 0.382 Fibonacci retracement lining up exactly at this area. So there is a good probability of seeing the market going and testing the level before then potentially getting rejected to the upside. Now, dropping down the daily time frame, what do we see? Now, from a daily standpoint, the situation is quite clear. We can notice how the market has just created a double top at that zone. However, if we follow the pattern, we can notice that if the market will now go and test that weekly 0.32 that we have just identified and also go for a deeper test of the previous resistance turn support on the weekly, essentially here on the daily time frame, it would create an M pattern. And in general, after the creation of an M pattern, you would expect a rejection to the upside. We have seen this pattern play out in multiple occasions. For example, also here, we have this M pattern. After that, the market rejected to the upside. So if the market here will create this M pattern, there's a good probability of seeing more institutional longing of USDJPY, which at that point could further increase the probabilities of a potential rejection to the upside away from this level. Now, speaking about institutional longing, if we're going to see what we have when it comes to the commitment of traders, so what the big players in the market are doing, and we look at the data precisely for the JPY, what do we see? Now, first of all, if we're looking at the data for the JPY, we have to keep in mind that we are already looking at JPY USD because all currencies on the spot are traded against the USD. So since we want informations on USDJPY, we simply have to reverse everything. And if we see here the net positions went from 66K down to 2.3K, it means that institutions have moved to the bearish side of the JPY. But in order for them to move to the bearish side of the JPY, so essentially to short the JPY, since all currencies are traded against the USD, they're actually longing USDJPY by shorting the JPY USD. So In a situation like this, institutions clearly are making the JPY weaker and strengthening USDJPY, so longing it. Now, let's keep this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now back to the analysis. So in a situation like this, if the market will go and test this support zone, at that point, there is definitely the possibility of seeing more institutional longing, which at that point could further increase the probabilities of a potential rejection to the upside away from this level. So if we will have this correction, what would I expect? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would create this M pattern and we would start to see more institutional longing of USDJPY, if the market would shift from an intraday bearish to bullish market, definitely wouldn't be surprised to see a potential rejection to the upside away from this level. That definitely wouldn't surprise me. Now, all these general analysis, tutorials, and concepts that you see me speak about on my YouTube channel are really just the tip of the iceberg, because if you really want to learn more, I will definitely suggest that you go and check out the transparentfxtrading.com website, which you find also linked in the description. Here, you will have the possibility to gain access to all my courses. So really complete courses that will guide you from the very basics of charting all the way up to more advanced concepts like building algorithmic trading strategies using quantitative finance tools like the quant analyzer to build portfolios of strategies, and a lot of really important and really interesting things that you need to know if you want to become a better trader. So this is something you really cannot afford to miss. You also have the possibility to gain access to the trading station software with the Telegram notifications integration, one-on-one mentoring directly with me, the COT data software that you often see me use on the YouTube channel, and you also have the possibility to integrate with gaining access to all my EAs, so my personal EAs, the ones that I have developed and that I trade on my own account, and also to have access to the trading show, which is essentially a live stream of all trades coming from my account directly on the Telegram channel as they are executed and managed. Here on the website, you will see that there is the complete presentation of all the EAs that I personally run. And if you continue to scroll down, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. And there is also per time slot this special discount. So at the moment, there are 10 days before the next price increase. So I would really suggest that you go and check it out as soon as possible. The link is in the description, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.